Well, check. 1, 2. Happy Mother's Day. Hey, let's get started. Do we have some news? Over the weekend, it was announced that billionaire George Soros cuts his ties to Elon Musk. The famed short seller sold all his Tesla shares in quarter one, acquired gradually since the second quarter of 2022. Now, yes, I've changed my screen to white. Let's see if this is going to help us be able to see the picture a little bit better. So let's see how this is working for us. So for example, right now we are going to look at Tesla. We're going to talk about Tesla today only. When we look at the 3-year chart on Tesla, we're going to focus here on two things. Number one is the awesome oscillator. As we see that last time it was green down here, the market was forget about the market. The Tesla was going up. So you see this? This is a green bar right here, which correlates with the awesome oscillator. As you can see, now the awesome oscillator has turned red. The awesome oscillator actually, in fact, the moment that you're expecting a big push is when it crosses this line right here. Do you see this red line? That is the lip. This is the lip of it. So this right here is that line that when you see it cross to the upside, it's when you expect more of a push, more bullish momentum growing. In this case, what we see is that we have red on the awesome oscillator, and we are going to look at the 3-year chart first. We have here this line that I made. I'm going to remove it, and let's focus on, let's get rid of this line right there and this line right here. Okay, so if I grab as a teaching point, I add a drawing and I go to regression channel and I pick the top and I move it all the way to the right, and this is what I can develop. I can develop a channel in which Tesla has been bouncing off, right? So we have here a wave down, a wave up. You notice it didn't reach all the way to the bottom, but it stopped halfway. It retested here on this bar right here. It retested here on this bar. Then it got rejected again, came back down, crossed it. Once it crosses the middle, it goes to retest the top. Great. So far, so good. Now, as you notice, it wicked right out of this line. And the resistance is right here at 385 or so. For Tesla, it's been quite a strong resistance right up here. Once it acted as a support here shortly, and then it acted as a resistance here once, two, three, four, five, 6 times there, right? And so after the 6th time, we went down lower. So we have now a wave down, which gets support right at the bottom line of the regression channel. And now we go to the top again. We go retest. What do? We go all the way up. Then we come back down. Look, what's happening here is there's a line here, right? And that line is the 150 moving average. Shortly, it found some resistance. Some support at this line right here. It found some support at the 150, and at that time, you would think that it was going to bounce, and that's why people were buying into this. It wicked right out. It wicked second time, and it tricked you into buying this, but only to be rejected again. Now it went and crossed below the 150. Guys, we have been trading below the 150 moving average on Tesla. Not only that, it got worse because now we're trading below this red line right here, which is the 200 moving average. So that 200 moving average is now acting as a resistance. Great. That's the 3-year chart, right? That's the 3-year chart. As you guys can see, we are trading below that line. Now, let's go look around. MACD, does it look like it's about to push up? No, it looks like it's about to go down lower. You're not gonna see it on your screen here because it only lets me see only lets me show you one line at a time. But we will go over the awesome oscillator first, and as we're gonna go to the 1-year chart, we're gonna start seeing how this is gonna play out. So for the 1-year chart, are you still trading below the 200? And this is your 200 right here, which yes, the answer is yes. For the long term, when we are trading below the 200, for the medium to long term, it has a bearish tone to it. Now, you can argue that you are about to cross, and this line right here is the 50 moving average, and they are together. The 50 and the 150 are very close together. That's going to act as a resistance. Now, you notice here that we came down here to the bottom of the channel as we talked. It went and pushed back up. Now we are now in in a we are in the middle of the channel right here. Look, this is the bottom down here, and this is the middle. It's a little bit difficult to determine once you zoom in, but we are in the middle of the channel. Let's zoom out to make sure. We are right in the middle. That means we bounce once from the middle, twice from the middle, and then we are being rejected. We are being rejected at this area, 150 and the 50. Now, if we go down lower to the bottom of the channel, you are looking at a drop to around this area, which is the 145 area. At the 145, you'd have to start to get worried, because if we end up crossing this line right here, this line right there, which is the middle of the regression channel, you will go down lower. As it is right now, you are trading below all the moving averages, all the medium to long-term moving averages. I removed the short-term moving averages just to make it less confusing. But so what we have now is trading below the 200, the 150, and the 50. This is bearish. Now, the awesome oscillator, although it's green, is not above the lip line, which is not bullish. Now, let's go over some other things that I have here. We're going to change a few things. Let's go over some of my other strategies. In this case, we're going to use the FOBO. We're going to select that, use set, apply, and we're going to do that. Okay. So you guys can see here for the yearly chart, now we have a green cloud and a red cloud, correct? Now we have the MACD, and that's as much as you actually guys might be able to see a little bit more, but let's go zooming in into this thing. So we have here every time that we get a sell signal with the yellow arrow, we end up switching out of the green cloud, as you guys can see right there. Right here, we had a green cloud going for a while. Then we had the first signal, the purple arrow down here, telling us that we're changing direction, heading down. Although you had the dots of support at the bottom, these dots right here, which were telling you that maybe it's going a little bit higher. It lost momentum right here. And as you can see, the cloud was green, and then it's like a space that is blank. It's not red, it's not green, which means that this candle right here changed your momentum by giving you this yellow arrow. Now look at the dot of resistance that pops in a couple days later. Now look, you see this white square we are talking about? We are getting that right now. We're gonna get that right now. And so although it's in the green cloud, it is possible that we take that out. And as we take that out, look at the MACD is cooling off. Look how it is possible that we are going to go down, because you're getting the sell signal right here, marked by the yellow arrow that we talked about, which is right there. And then again, we are getting rejected by the 150 and the 50. Now, let's look at other things and see if this is going to play out. Let's look now at another. Okay, you have the Elliott oscillator that is red down here. As you guys can see, it correlates with this bar, red as well. You have the RSI, that the RSI, if you make a line from here to there, and you go up from the line that you made, and you single out that bar, and you make a line from here to there. That's what it looks like, right, so far. That means it's not diverging. That means that the peak, this peak right here, correlates with a peak that is higher, and this is a lower high which correlates with a lower high. This is also pointing downwards, which is likely going to either maybe try one more time and head down lower, but there's a few other things that are are gonna move this thing around. Let me change some things here. Let me move a few things so you're able to see it. Let's move the Elliott down, and then we're gonna move the ADXR higher. Remove the RSI and put it down here. We apply that, and then we OK. So I want to show you guys also the ADXR is another one that is telling us that the direction is likely downwards, right? Because you have a cross right here. ADXR is trying to cross. Also notice last time the ADXR crossed to the upside. You see the red line right here cross the purple. It took a little bit longer. It's a little bit delayed. It took 1, 2, 3 days later for it to start trying to bounce, right? So although you can look at, for example, here, look, you see this cross right here. We are about to cross right there. Actually, in fact, I think it crossed already. Yeah, it already crossed. So that's already crossed. And last time we crossed, it's right here, guys. It's right here. So we ended up dropping from this point, not in a straight line. Not in a straight line. I always tell you guys, not in a straight line. Look, it dropped from here, and it went down about 15%. Right? It went down from $205 down to 162. And so, but it didn't go down in a straight line. As we can see, as you had the cross of the ADXR right here, we ended up going upwards a little bit. We ended up going one day down, the next way up. Then we had 1, 2. It took us about 3 days or so. A fourth one pushed, and the next one went. So it does take about 4 or 5 days for it to kick in. Let's look at other indicators as well. Let's look at other indicators as well. Let's look and see if the elegant oscillator is doing anything. Okay. So the elegant oscillator told you here that there was a change of direction, and it was correct on the yearly. It told you here that we were going up, and so we did. After this bar, we went up, made a higher high from here. From this point, we made a higher high. Retraced back and even made another high. So that was a change of direction. So that was correct there. And then it told you down here. Look, it told you here that the direction is changing. Now, was it right away? No, it wasn't right away. It took a while, in fact. Look, it pointed the arrow to the downside, and if you correlate it with the McClellan oscillator, which is down here in green, you guys can see that you guys cannot see that, do you? As I'm looking at the volume is too big, so I got to remove the volume. Give me a second. Volume is not helping me here. Interesting. And I'm back. So I was able to figure it out. So we were talking about how the McClellan oscillator, which is down here in green, is supposed to go together with the markets, right? So when you're getting a peak from here, for example, I'll explain this because a lot of people, when you say McClellan oscillator, nobody really understands what it is that it does. But you see a peak right here. This peak, if I go up on a straight line, it correlates with this bar right here. Now that bar, for this to make sense, this would tell me that my next bar should be a lower high on this peak right there. But it wasn't. It was a higher high, right? That is a divergence. The next one, the next peak right down here, it went down, which correlates, the market went down. But did it go down a lot? No, it just went down a little bit. So that's still divergent. It's still not making sense. Now take a look. You see this peak right here? This one made sense. Peak here, drop to here, and this peak drop to here. That made sense. That's going with the market. We go up, and we go up to the peak. That's correct. We go down. That's correct. We go back up. Is that correct? It's not. So this one right here, this correlated. This did not correlate because this area is a lower peak. This is a higher peak. If I go up and I look at the price, this gave me a higher number right here. This made me hit 310, and this was a lower. So how come this peak is higher and this is lower? That means it's a divergence. So you grab a line. You grab a line and you put it right there like that, and you go up. You go up here and you do the same exact thing. And the problem with this line is the fact that it's going upwards. So you grab a line, you go like that, and you go, does it correlate? No, it's diverging from each other. So there is a divergence. So what does the market do? It catches on to the fact that we should have been going down instead of going up. Okay, now remove that. Let's go. So now let's focus. Let's focus now on what we have right now, right? We have a peak right here. That looks like that. And we're gonna go see if this is making sense. Top peak, that's a higher high. This is a lower high, which correlates with the peak, with the McClellan oscillator. Next, we come down lower, which correlates with the McClellan oscillator. Here it gives you a buy signal, which correlates with the McClellan oscillator. In fact, the McClellan oscillator told us that we were going to bounce before we did. And so we did. We bounced. It didn't really go up higher much, but it correlates with the peak as well. Then it went down. Here is your first divergence. It should have gone down. It did not. Here is your first divergence right there. Right there. The peak went lower. This line went lower. The McClellan oscillator went lower. And this, in fact, went higher. Does not correlate. First one. The next one. McClellan oscillator points upwards and then down. And that's correlating so far. So it's making some divergences, and as you can see, eventually it catches on. Now, if you look at this right here, as a line, you notice that there has been some resistance at that line. So you know that every time that we reach close to that line, close to this line right there, which we're gonna make yellow or orange, that line, every time we hit that, we are close to or at the top. So we are either we already hit it and we are heading back down, which would correlate with this coming down to a new low. Now, you ask me, is it possible that Tesla is going to reach all the way down there? Lower than it was before. Possible, right? So you zoom in on the 180 days. Is it possible that we're going to probably stop at this alarm right here that I have a 160? That would make some sense. It looks like there's some support right there. pretty strong support at 160. So probably come down 160 or so and decide where we're gonna go. But as you guys can see, that's you're getting on the 180 day, you're getting the elegant oscillator signal that we are about to change direction. Yes, it does take some time, but eventually it catches on. All right, guys. Let's take a look at the as a last thing on the daily chart. I do not use the elegant for the short moves, so it doesn't work. But I do change to something different as I'm day trading. Um, we're gonna look at this one right here. Use set. Yeah, it looks a little bit messy, but it tells a story. So the majority of the times, once you are in the red cloud, you are heading down. You got the dots of resistance at the top, and every time you get a change of direction, you're gonna start seeing the dots of support being born down here. But eventually, they are able to catch up. So we're going into the green cloud here. Goes back to red. It gives you a couple of buying signals here, and eventually tries to push on. But at the end of the day, as you guys can see, it gets pretty much rejected once again. It gives you that white square that I tell you about, that every time we are in a green cloud, changes direction. Next bar, um, it's a big one. So this should have told you that you should be, it warned you that there was a change of direction coming. That's pretty much it for Tesla. If you look at the money flow and you look at the money flow index, you're going to be able to determine direction on these kind of stocks as well. Um, if you're able to watch the video all the way to the end, then you can ask me what this line is about, and maybe I'll tell you. All right, guys. I think that's about it. I hope this video is a little bit more clear, and let me know if it makes any more sense or if you prefer the black screen instead of the white. All right. Have a good one and see you tomorrow.